Investing live stream. Again, something that we're just now trying out and playing with. Appreciate you being here with me. My name is Simon Erickson, the founder and CEO of Seven Investing. We make stock recommendations each and every month, and we look at our five best buys of all of our previous recommendations every month as well. And part of the research process that informs those is digging into what's going on with a whole bunch of companies, casting a wide net and kind of checking in on, when they report earnings, what is it that's driving these stocks higher or lower in any given quarter. And so this morning's, I wanted to check in on the Trade Desk. The Trade Desk is a company that is a digital advertising leader. It's on the demand side of things. So it works with big ad agencies to make sure that the right ad is finding the right person at the right time in the right media. And of course, they're using AI to do this so efficiently. They're going out there and looking relentlessly at improving the return on investment of all of the advertising campaigns, looking at a trillion different ad impressions each and every day. Boils down to about 13 million every second. So a lot of information informing the bidding process that goes out there and places the right ad in the right place at the right time. I want to put up a slide really quickly. Let's see if we can get the screen share to work. This is something that we saw for excuse me, we'll pull that up 1 second right here. The Trade Desk. Yep. I'm going to do a screen share, hopefully, of this. This is what we're looking at, not Crocs. We don't want to talk about Crocs today. We want to talk about the Trade Desk. And the Trade Desk has done quite well. I don't think that we're going to get. Oh, we ran into an issue. Excuse me. The screen share is not going to work. I'll just talk through it here. But the Trade Desk, basically back in the fourth quarter, for the first time in 8 years, had its first quarterly sell-off. Uh, it missed its expectations for the quarterly revenues for the first time in 8 years. Trade Desk has always been the stock market's darling, and for the first time in the past 32 quarters, it missed revenues. And it comes out there and it issues very, very conservative first quarter 2025 guidance. It says, hey, we're only expecting $575 million in revenue this quarter. That would represent only 17% quarterly growth, where we were used to the Trade Desk reporting 20, 25, even 30% year over year quarterly growth. Again, this is a company that takes a cut of every advertising dollar that's placed into the campaigns, typically at about 20% take rate. And so when advertising budgets come down, which might be true if there's a slowdown in consumer spending, in discretionary spending, if there is trade negotiations with goods that are coming from other countries, if there is fears about a recession, all of these might be impacting the advertising that's taking place over the Trade Desk platform. And so they came out there and had very, very conservative guidance. 17% year over year is what they're saying for the first quarter. They actually came out and just knocked it out of the park yesterday. Reported $616 million of first quarter revenue, which amounted to 25% year over year growth. And even that was at a consistent 34% EBITDA margin. Why does all this matter? Why is this important? Yes, okay, they beat earnings. That's fantastic. First and foremost, it's important to show that there is still confidence in the U.S. economy from consumers. 70% of GDP is tied directly to consumer spending. And the Trade Desk is right there in that exact sector when it's doing the advertising that's related to consumer spending. We're going to be keeping an eye on CTV, connected television, which is 40% of Trade Desk's overall revenue. And a lot of that is just brand advertising, right? Top of mind with consumers that are watching their favorite streaming stations while in the home, on the couch, right? This is not necessarily direct campaigns and direct response advertising from internet placed ads or things that are going into email lists or things like that. This is something you're watching at home and you're getting kind of a broader feel, kind of like the Coca-Cola advertising with the cute little polar bears that were holding Cokes. Are we going to see brand advertising maintained in 2025? The first quarter results being up 25% year over year and at a 34% EBITDA margin suggests that yes, we are. So that's the first good thing that's going on with the Trade Desk. But I actually want to talk about something that's even bigger that I think is underappreciated. Again, this has been a fantastic business. We can kind of look under the microscope at any given quarter. There's no doubt that Jeff Green was not about to miss quarterly expectations for 2 quarters in a row. That's why he puts out a very, very, very soft guidance for this first quarter. Anyone who picked up on it knew that he was sandbagging and that the Trade Desk was going to knock it out of the park on this quarter. But the bigger thing that's going on right now is just the consolidation of the supply chain when it comes to digital advertising. Look at the Trade Desk investor presentation for the past 3 years and look at how the number of companies that are in their box of this ecosystem of demand side platforms keeps getting smaller and smaller. And the reason that that's happening is because there's consolidation. The bigger are getting bigger. They gobble up the smaller and less profitable companies. They plug them in, and then immediately they get access to those ad accounts and to the distribution of the supply side partners who are publishing podcasts, publishing websites, things like this. So the trade desk is in a perfect position for consolidation because they're one of the more profitable ones that's got money to work with rather than being on the other side of that equation. And then the second thing that I want to keep an eye on as an investor is OpenPath. OpenPath is just completely disrupting the digital ad ecosystem as we know it. There used to be kind of demand side platforms that are working with the advertising agencies that would plug into supply side platforms who were working with the publishers. They'd meet in the middle. There would be an auction facilitated by an exchange. You'd find the right real time bid that you'd go out there and you'd bid on. Then you'd win that bid and you'd place your advertisement accordingly. For large publishers like the Washington Post, like USA Today, they don't really need all of the analytics from these auctions, from these exchanges, right? It's great that we build these platforms and we did these exchanges, but say that you're publishing a whole bunch of material every day and you've got your own in-house analytics experts to see which ones are getting you the best rates. You might want to work directly with the trade desk platform. Forget the exchanges, forget the bidding. Just work directly with the trade desk where you're opening up some inventory on your site or on your podcast or whatever it might be, and allowing the ad agencies that the trade desk represents to place ads directly in them because they know that they're going to work because it's a large enough audience and is exactly who you want to reach. That is a much more efficient middleman that cuts out at least one and maybe up to three of those middleman partners that are supplying the data and the analytics on the bids, on the real-time bidding, that are facilitating the exchanges where the bidding is taking place, or even the supply side partner that's representing the publishers in the equation. If you can get rid of that 10 to 20% cut that those guys are taking and just collapse into the trade desk, who might charge you, the same 20% take rate for what they're doing, all of a sudden you've got a business that could be several times larger than what the trade desk is currently. So let's keep an eye on OpenPath as a long-term catalyst for this business. As we look back in the first quarter, not surprisingly, trade desk knocked it out of the park and surpassed the expectations that the street had for those first quarter revenue and earnings. So that wraps it up. That's Trade Desk. TTD is the ticker for that one if you want to follow along. I appreciate you following along with our 7 Investing live stream. If you want to see our actual recommendations, check out 7investing.com. Or if you want to sign up for a free, entirely first week for absolutely free, 7investing.com/subscribe. Pretty excited that I'm going to be releasing my best buys for May here next week. The best buys we had in April are doing phenomenally well in this earnings season so far. And I'm really, really pumped up to put a new list of 5 best buys out there for you and publish them next week. So I hope you all have a great day. Have a great weekend. We'll see you again next week. We're here to empower you to invest in your future. We are 7 Investing.